off with the large banks this week, but there's really only 5 stocks that matter. And you know what they are. They're the FAANGs. They start reporting next week with Netflix, but it's time we checked in to see what these earnings charts look like because they're looking pretty spectacular. 3 out of the 5 have busted out now to new all-time highs, and at least one of them has a perfect track record. So let's take a closer look at the FAANG earnings charts because you're going to want to be prepared for these earnings reports that are coming in the next 2 weeks. So we're going to go in order of FAANG because of course we are. And it leads off with Facebook, of course, ticker FB. And Facebook was always kind of lagging the last couple of years because of all its issues with privacy and the elections and other things. So the stock always lagged, but that was then and this is now, and you can see it's busting out to new highs here. This is one of the 3 that's having a good 2021. Shares are up almost 30% here now this year, and it's put together 4 big beats in a row. PE is still relatively attractive here. A lot of people think the FAANGs are high priced and at nosebleed levels because they keep hitting highs, but Facebook trading at 26 times with a peg of just 1.3, almost a value peg there. So this is going to be obviously one to watch. All of the FAANGs are, but can it keep this momentum? We will see. Then we're going to switch over to Apple. This is the one with the perfect earnings surprise track record. Hasn't missed in 5 years. Very impressive during a pandemic. And now we're finally getting another breakout in the shares. It's only up about 9% year to date because it had been treading water, as you can see. Even coming off of, this big beat there, an earnings surprise of 40% for a $1 trillion company. Will we get another one of that magnitude here? We don't know, but I'm not betting anything against Apple here. It is still trading at a fairly high valuation compared to where it was a couple of years ago. PE is at 28. That's down a little bit from when it was around 30 to 32 a couple of months ago. So maybe the treading water has helped make its valuations a little bit better here, but it's not cheap, but nobody cares. So Apple, obviously, everyone will be tuning in. Then we're going to switch it over to the other A, Amazon. And this one, too, has put together huge earnings beats, 4 in a row, because it was a pandemic play. It was where everybody was going and shopping during the pandemic, and even maybe here on the reopen. Now, they just had Amazon Prime Day, so that could be included in this quarter. So that'll be interesting. They gave us some tidbits about how well that went. But we will find out more if it was good, because Amazon always likes to promote only the good news, never the bad news. Year to date, these shares are up 14.2%. So it is picking up little steam and has busted out of that narrow trading range it had been in for months. PE is still elevated, but it's around where it has been the last several months, around 65 times. That seems to be kind of the norm for Amazon here, and it's down off of what it used to be a couple of years ago when it was trading closer to 100 times. So it has gotten cheaper as that E side of the equation has risen. But will we see another massive beat? Will it propel the shares? We will see. Then we're going to talk about the troublemaker one. Netflix, this is the first one to report. So this is the only one that hasn't really busted out of that range that it's been in during most of the pandemic. It did beat last quarter, but that didn't do anything to bust out the shares. What will move these shares? They're actually trading down about 1% or so on the year. This is the best performing stock of the last 10 years, however. So if it takes a break, it takes a break. PE is still elevated at 51 times, but that is down from where it used to trade. So it is a little bit cheaper, much like Amazon. PEG is just 1.6, so I'm liking that low PEG, and that helps with the valuation as well. But we will see. It's usually not about the earnings miss or beat here. It is about the number of subscribers and what's happening with that. So that's all in play with Netflix, but they'll be leading off the FAANGs, so they're going to be setting somewhat the tone. And then we're going to wrap it up with the G, which is really the other A, Alphabet. It has put together 4 big beats in a row, much like some of its competitors here. But these shares have been the hottest among the FAANG, up 45% year to date, keeps hitting new all-time highs. Now, its PE has actually risen a bit here as the shares have continued to run, because it used to be among the cheaper, like Facebook, trading around 25, 26 times. Now it's trading at 28, but its PEG is also pretty low at just 1.5. So I'm liking that. So are any of these FAANG stocks overvalued? It doesn't seem like it to me compared to other stocks on the stock market right now, especially in technology. So the FAANG's still looking kind of attractive here, even as we go into this earnings season. So nearly everybody owns FAANG in some capacity. If you own an S&P 500 fund, if you own a tech ETF, if you own the QQQs, you own FAANG. And maybe some of you own the individual shares. I know I do. I own 3 out of the 5. I do not own Apple or Netflix, but I own the other 3. I'm sure some of you own all 5, and maybe some of you have a mixture like I do. But these are going to be key reports again this earnings season. Remember, Alphabet blew it out last quarter with maybe one of its best quarters ever. Can it do it again? One of the analysts believes it can, but I'm a little doubtful, but we'll see. Still, these trillion-dollar companies are operating at full steam as the global economy reopens. And so these are going to be key earnings to watch this earnings season. I'll be covering all of the other key charts because there is more other than FAANG coming up. So you don't want to miss a single episode of the Earnings All-Stars videos. Get us at zacks.com/YouTube, subscribe to our YouTube channel, get us on Twitter and StockTwits, but get us somewhere, and I'll see you again next time with some more charts.